This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil fell on Thursday after rising in the previous session, pressured by expectations of lower U.S. fuel demand with the end of the summer travel season and by the restart of Russian supply to Hungary and Slovakia through the Druzhba pipeline. Crude had risen on Wednesday after official data showed U.S. crude inventories fell by 2.4 million barrels in the week ended August 22, compared with analysts' expectations in a Reuters poll for a 1.9 million barrel draw, a sign of strong demand. However, oil market participants see the upcoming U.S. Labor Day long weekend as the unofficial end of the summer driving season, and the onset of lower U.S. demand for gasoline.
Volatility increased in Chinese crude and fuel oil futures markets this week on concerns U.S. sanctions on an oil storage terminal in East China would prevent physical deliveries for the contracts. The State Department on August 21 imposed sanctions on Yangshan Shenggang International Petroleum Storage and Transportation in Zhejiang Province and Qingdao Port Hye Dongjiaku Oil Products in Shandong Province for handling imports of Iranian oil aboard tankers previously targeted by U.S. sanctions. Chinese majors and international trading houses store fuel oil or hold warehouse receipts in the bonded delivery tanks linked to the Shanghai Futures Exchange for futures contract settlement at Yangshan.
Moving on to the top news in the energy sector.
High U.S. tariffs and potential anti-dumping duties on Indian solar panel exports will exacerbate a supply glut in India next year as domestic project bidding slows, according to industry officials and analysts. U.S. President Donald Trump's 50% tariffs on shipments from India will choke panel sales to its top overseas market, which accounts for 90% of module exports, they said. The situation could deteriorate further if anti-dumping duties are imposed on some manufacturers following a petition filed on July 17 by U.S. solar companies with the Commerce Department seeking duties on imports from India, Indonesia, and Laos.
U.S. crude stocks, gasoline, and distillate inventories fell last week as demand rose, the Energy Information Administration said on Wednesday. Crude inventories fell by 2.4 million barrels to 418.3 million barrels in the week ended August 22, the EIA said, compared with analysts' expectations in a Reuters poll for a 1.9 million barrel draw. Oil futures extended gains following the report. Global Brent crude futures were trading at $67.87 a barrel, up 65 cents at 10:36 a.m. Eastern Daylight Saving Time, 14:36 GMT, while U.S. West Texas Intermediate futures CLC1 were trading at $63.98 a barrel, up 73 cents. Next, we have the top news in metal markets. China will push to cut steel production between 2025 and 2026, according to an official document reviewed by Reuters and a source with knowledge of the matter, as it tackles overcapacity that has hit prices and fed a worldwide protectionist backlash. The world's largest steel producer will strictly curb new capacity and reduce production, the planning document from the Industry and Environment Ministries, among others, showed. The steel industry is currently facing excess supply and insufficient effective demand, leading to a supply-demand imbalance that affects development quality and efficiency, it read.
Gold held firm near a more than two-week peak on Thursday, as the dollar softened and investors hunkered down for Friday's U.S. inflation data for cues on the Federal Reserve's policy path. Spot gold was up 0.1% at $3,399.60 per ounce, as of 0851 GMT, after hitting $3,401.73, its highest level since August 11, earlier in the session. U.S. gold futures for December delivery edged 0.2% higher to $3,456.20. The dollar index was down 0.1% against its rivals.
We will now look at the top news in the agricultural sector.
India has extended an import duty exemption on cotton by 3 months, until the end of December, a government order showed on Thursday, as New Delhi seeks to support the local garment industry that has been hit by hefty U.S. tariffs. The imports are likely to support global cotton prices, which erased losses and rose 0.2% after the order. However, they are likely to reduce demand for local cotton, pressuring domestic prices, market watchers said. The world's second biggest cotton producer had earlier announced an exemption on cotton imports from an 11% duty until September end and has now extended it to December 31st.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.